How you doing, man?
Not too bad. What's up?
Not much. Are you in Michigan?
I'm in Ohio, licensed in Michigan as well.
Okay. And you're a mortgage specialist, and who are you working for?
I work for Equity Resources. We're a mortgage bank.
Mm-hmm.
Um, I'm based out of Newark, Ohio, like the Columbus area.
Mm-hmm.
Um, and yeah, I'm licensed in Ohio and Michigan. I live in Waterville, but I'm in most of my clients are like Toledo, Ohio area and Southeast Michigan.
Nice, Waterville. I'm from Perrysburg, is what it says, but um,
Nice, nice. I'm from Maumee. I went to
yeah,
school
there
in
you go.
Maumee,
There
so.
you go. What kind of got you into that?
You know, I had a completely different career path. I was in the auto industry. I was working in paint and driving to Detroit every day from the Toledo area. And I got with my mortgage specialist because I was actually thinking about refinancing my house. And we were sitting having lunch, and she was like, "Why don't you do what I do?" She told me more about it, and it kind of sounded kind of more my speed than watching paint dry for a living. So I got into mortgage lending.
Nice. So is are you kind of like a broker, or are you a specific home buyers come to you for this specific
We're
loan?
so we're a mortgage bank, so that's all we
Okay.
do. We only do mortgages, um, and yeah, I mean my main relationship is with realtors, and then obviously with people who are looking to buy homes and refinance. I think a lot of people don't understand that we're kind of the starting point for the home buying process, or a lot of realtors um, kind of lean on us to help them kind of guide the client throughout the process. So yeah, it's kind of we're the backbone to the whole transaction because we're the money side of things.
Hmm.
So
Have you been getting a lot of refinances because rates are at like so at bottom?
yeah, there's a lot of people taking advantage uh, of the market right now because the market is still pretty solid. I mean, you know, taking the times that we're given right now. Um, yeah, I'm still seeing a lot of people coming in refinancing. Um, and helping out their financial situation during this time.
How do you think the mortgage industry is going to be impacted by this pandemic?
Good and bad. What I'm seeing is it's not crazy like 08, 09, right? And that was all,
Hmm.
people doing some shady things. But that I, I'm I really don't think it's going to be affected like people anticipate. I think we're still going to see good rates. I still think I mean, we're anticipating a giant buying season still as, states start to open up and do things. Um, so I think the market's still there. I still think there's plenty of people out there that want to buy. I still think there's plenty of people that want to sell and upgrade or sell and move. And um, I think the mortgage industry or the housing and real estate industry in itself is going to be the backbone of kind of this stuff, you know, leveling out and kind of growing from here.
Yeah, on my street alone, there's been about three houses sold and purchased, and then one just started getting made. So just on my like just from what I'm witnessing in Columbus, my area, it's just nothing has changed. People are still getting shown houses, um,
Yeah,
but
and what I'm hearing from realtors is that these houses are just something goes on the market, and as long as there's a strong offer, I mean, we're seeing houses, go on the market, and then 2 days later it's off the market because there's an accepted offer and it's under contract. So it's like obviously it's still hot. Obviously, there's still people buying and selling. I mean, right before all this stuff happened, it was insane.
yeah,
It was insane, and everybody was like, "Oh my god, if this is just to show what the year is going to be, wow." Um, and then obviously all this stuff happens, but um, I still kind of think through the cobwebs of all this stuff going on, you still see that it's still active and hot.
was this kind of a out? Was this before this happened? Was this kind of looking to be like an outlier year of just it was everything was going bonkers? Really?
It was bonkers. Rates were better than we're seeing right now, just a little bit, but rates were great. Um, Yeah, we were anticipating for the summer to be insane. I mean, I was building realtor relationships, going like, "Hey, let's be partners because this is going to get wild."
Mm-hmm.
Um, it was really, I mean, everybody was telling me, "Man, what a time to get into mortgage lending because this is going to be insane." And
Mm-hmm.
then all this kind of transpired. So
Do you know why it kind of popped off like that? Do you just think just people just want to buy houses again? It's just been so long since 2008.
yeah, I think there's more information out. The masses right now who are buying are our age, right? They're
Mm-hmm.
millennials. They're people who are now financially set. Maybe they're in their job that they've worked their butts off to get. They're making some good income. They're starting families. So those people are just now kind of peeking in and seeking information. And once those people get informed about the process not being that hard, you start to see a lot of buyers.
Mm-hmm. Um, so I was talking to Easton, and he said he did something. I forget what it was. It was like an owner financed, and then they pulled out, and then he was a backer. Do you know? I forget what he was talking about, but he had somebody buy the house, and then he became the person on the loan or something. Do you know what I'm talking about?
No, are you talking about his investment property?
Yeah, because that was
Well,
very interesting. I'm gonna have to talk to him about that.
from what I understood, is he just got a very basic loan
Mm.
from his parent, or yeah, like I think somebody helped him out get the money, and then he bought it all cash. And then what he's trying to do now is he's trying to refinance it so that he can pull that equity out of it,
Mm-hmm.
right? Because I think he paid for the property in cash. So let's say the property was $35,000.
Mm-hmm.
He paid for that property cash. So now he has no mortgage on it. All he's going to pay on it is his property taxes every
Mm-hmm.
year. So then he's going to fix it up, do whatever he wants to do. And then he's going to say, you know what? This property that I have here is worth $50,000 after everything that I've done to it. Now he's going to get it appraised. And if it appraises, he wants to get a mortgage on the property and pull that $50,000 out so that he has $50,000.
Mm-hmm.
Then he plans to go and buy another property with that 50 grand and do it over and over and over.
Mm-hmm. And then does that 50 grand become a loan to the bank, or what? Once you pull it out,
Yes.
yeah.
So once you pull it out, now you have a mortgage on that first property. So now you're paying monthly on 30 years to pay back that $50,000. But you have $50,000 cash to go do other things with.
Yeah.
A lot of people do that when they refinance their homes, to consolidate debt or home improvements, or to do, some investors do it this way. They pull out cash from one property to buy another one.
I'm trying to do that too, but I still got a pretty hefty loan on my property, but that's the name of the game. But
yeah, it's I think it's one of the biggest assets to build wealth. I'm getting into investing myself now that I kind of understand this side of things. So even off podcast, man, I can give you some info on kind of how this stuff works and
hell yeah,
some
man.
insight.
Yeah, I mean, I love real estate, and then I mean, just what you can do with it from I don't know, just using other people's money, and then depending on your circumstances, you can get a pretty decent loan, especially through FHA or whatever. But
Sure.
I haven't. It's been so long since I've looked into it, but I need to. So me and my sister bought this property that I'm in, and then it's in her name because I don't have 2 years income history, and then we have to live in it because it's our primary residencies for a year. But once I get that income history, I'm going to buy another property, and then try to totally just invest in, just have that as a rental property or something, or fix it up depending on how much I can put down. But that's the game plan for right now. And then all the rental income just keeps kind of like a compound. What is that? Rolling compound? I don't know what it's called, but just keep trying to buy houses through the rental income.
Mm-hmm. Mm-hmm. Yeah, a lot of people do it. You'd be surprised on the amount of people that do it, but you'd also be surprised on the amount of people that don't know anything about it.
Oh, yeah, totally agree.
And the crazy thing is that I'm learning in the industry right now is how many people out there don't know how the home buying process kind of works. So like I find myself just explaining it every single day when I talk to people, but I kind of sit back in my chair every now and then and I'm like, man, there is no like criteria or form that like lets people know how this process works at all. And unless you know somebody in the industry, because some people think just a realtor does everything. It's like, well, yeah, they show you the fancy windows and how the door squeaks and whatnot.
Yeah.
But like the money side of things comes from a bank, so you have to talk to somebody who's licensed to lend and to write mortgages. So I'm really surprised by that.
Why do you think that is? Do you think people were just so turned off after 2008 that it's just everybody was just done with mortgages and home buying?
I think partially that maybe some of the millennial people, and then mom and dad telling them the home buying process is crazy. You have to have 20% down and all this stuff. So I think it's a little bit of that. But I think just in general, there's never been information. There's never been. It's always been like this anomaly. Like, oh man, I hope I can buy a house one day. And it's like, you can. I mean, you don't have to make $1 million a year. You don't have to. Shoot, you don't even have to make $50,000 a year. I mean, it's just crazy that there's just not information out there. So what I like to see now is that at least people in my shoes as lenders, they're getting younger, and we're kind of more able to give the masses with social media and everything.
Yeah, else. Communication. Because you're
just
trying to get clients.
Yeah, but then at the same time, like I'm a big advocate of just like, hey, let me just be the info guy, and I'll be as transparent and informative as I can. And if you do business with me, awesome. If you don't, at least you learned something, and you go do your business somewhere else. I don't know. But yeah, I think in general, there hasn't been information out there.
Yeah, I feel for both of our industries that it's just a lot of people are older, and I don't know. It's just they just been so set in their ways that now I feel like younger blood is getting into the mix and kind of like adapting to the new social media and just the internet in general to, I don't know, just spread that awareness. Because you can't really learn it in school. I mean, I basically learned this through a real estate course in college, which I think everyone should take at some level in schooling, because it just made me want to get into real estate, but there's like no way to learn that stuff, unless you have like a loved one.
Yeah, I think we all could agree that in school we all could have learned like how does credit work, how do bills work, setting up your utilities when you get a new place. Just like very basic stuff that you use every day as an adult. And then a real estate course. How do I buy a house? And then what are all the different factors that go into different loan programs and percent down, and what are closing costs? What does all this stuff mean? And yeah, I think if there was more formal education for the masses, we wouldn't see this kind of disconnect.
Or 2008 happened as that happened, but I guess we can't kind of figure that out. But so are you primarily working? Where's your bulk of your buyers at? Would you say?
I'm in Northwest Ohio, so it's it's just the Maumee, Perrysburg, Waterville, that type of area.
Any Toledo? Properties?
Toledo people. Yeah. Dealing with some investors that are out of state that are investing up in Toledo. It's pretty funny to hear that my backyard is one of the hot investing cities that a lot of people from out of state, they'll call me up and say, yeah, I found this property, what do I got to do to get an investment loan on this? And I'm like, how did you hear about investing in Toledo? Oh, I've been doing research for years. It's really weird because I'm like, wow, really? Man, it's kind of right. Toledo's right down the road, and I didn't even know.
That's what I heard, that Toledo's getting hot from outside buyers, because I guess they see like California or comparable, just another state or whatever, and then they look at Toledo, they can get it for so cheap, and I guess that's what's happening.
It's the cheap real estate and the fact that your occupancy rate for tenants is so high, so they really think that they can keep a tenant in the property longer than other areas. And when I sit back and think about it, I'm like, yeah, whenever you do rent in this area, you do generally see people staying there for a year, 2 years, 3 years.
So what kind of, so you're just kind of reaching out to real estate agents and home buyers. How's your process kind of to do that?
So a lot of my business is the relationship with realtors.
Mm-hmm.
Um, because they're in front of clients, I'm in front of people telling them what I do, but um, they're obviously in front of more because, you know, whenever you think, oh, I want to buy a house, I got to get in touch with the realtor. Well, the realtor is always like, oh, I'm glad you got a hold of me, but you got to get a hold of a lender before we get in the car and go check out properties.
Mm-hmm.
So really just building a relationship with them, showing them where I can add value, whether it be through marketing or just a relationship. I think there's been a lot of bad business, just in general, just how business is done to where it's creating a friendship, right? And then also we do business together. Um, so it's just kind of creating that atmosphere, just showing them
Mm-hmm.
that, you know, this is a partnership. You know, you're trying to sell houses, I'm trying to write loans. I don't see why we don't, you know, have a good relationship and figure out the best way that we can service the clients that come to us.
Do you see
So,
do you see a lot of people get denied for loans, or like what's like the
um,
biggest reason people get denied for a loan?
um, there's a couple of things that come to mind. I would maybe say that the top thing would be like credit.
Mm-hmm.
Um, and debt to income. A lot of people don't understand that we're looking at all the debts that they have, you know, credit card payments, auto loans, anything that's going to show up on your credit report, and anything maybe that's been derogatory that you've done in the past. You know, we've all done stupid things and haven't paid a bill and let it go to collections or whatever. But there's a number of different things that I see on credit reports that give people a tough time, or have yanked their credit score down, to where we have to do a little bit of repair and look at, you know, what can we pay off, who can we call to kind of get something settled, and maybe we wait, you know, 30, 60 days to let your score kind of adjust. So I would say credit score mainly,
Mm-hmm.
and some things that pop up on those things, because that's kind of the deciding factor on kind of where we kind of what loan program we figure out for you.
And like determining the interest rate too.
Yeah. Oh, of
Yeah.
course. It's gonna show, you know, the amount of risk. You know, how
Yeah.
risky are you?
Uh, what are interest rates at right now? Do you know for home buyer?
So, so that's a very blanketed question, and I always kind of laugh when I get it because, um, you could have a similar, you know, financial profile to me and go and pull an interest rate, and it could be, I don't know, 3.5, and then I could go do it with a very similar financial profile and get 3.25 or 3%.
Mm-hmm.
So I always like to tell people interest rates aren't just like this thing that like
Everyone gets
hangs
the same.
around.
Yeah.
Yeah, and it's like, oh, what are they at today? What's the rate going today for this? And it's like, well, what's your loan amount? How much are you
Mm-hmm.
putting down? What's your credit score look like? All those things kind of factor into what interest rate kind of, you know, you fall into.
Is it,
Um,
but kind of like 3 to 4% is, because I think I got mine at 4. That was like a year ago, which is just wild. That's just crazy that you can get a loan for 4% or now lower, which is just crazy.
yeah. I've been, I would say everything is well inside the threes.
That's crazy. I can't like I'm telling my friends to like get on it because I don't know how long this interest rate environment's going to last. I mean, I can't see it going in negative routes, especially in the United States. But uh, that'd be crazy if it actually did go in the negative, negative interest
Yeah,
rates. But uh,
I've been seeing, I don't know. Yeah, I've been telling people too. It's just like now is the time because of even with COVID being around and all that stuff. Now is the time to, if you've been thinking about it, if you've debated it, even if you have a house now and you're like, man, maybe we should refinance it because we bought it a couple of years ago and rates were much higher. Now is the time because I'm young. I haven't been in the business all that long, but just in the time that I've been in the business, um, I got licensed in February, so I'm only a couple months in, but I haven't seen rates move all that much.
Mm-hmm.
And from what I mean, from people who obviously I work with, and my managers and things like that, they're like, the market's really never been like this. So as a new loan officer like myself and people who are in the industry, it's like we really got to get out there and just let people know that this is a weird and unique time. So now's the time.
Mm-hmm. Well, how much does it cost to do a refinance with you guys? Is it flat rate or kind of like, or what?
We personally charge a flat rate, but it's, I don't know. That's a blanketed question too, because then it's like closing costs and things like that. It's not, it's kind of varies from person to person, and I don't know.
Because I was looking to refinance, there's like $2,000 to do it, and I was like, that's not worth it for knocking off a couple percent, like half, basis points. But
I would say the whole general rule used to be like, if you could save like a point in interest, you could generally recoup the cost of what it's going to cost within 24 months. So they always say like for me, I'm 2 years into a 30-year mortgage. So if I were to refinance right now, they would want, I would think to myself, man, I would want to recoup those costs within 24 months to make that 2 years that I already have under my belt worth it. So that I could, reap the benefits of having that lower interest rate. So that's generally the rule that I always tell people, but that's not always the case. Some people, it's, you refinance so that you can, your payment's $100 cheaper. That saves you a boatload of money a year. A lot of people don't know when you refinance, you don't have a mortgage payment for 30 days. That's a month where you don't have to pay your mortgage.
Damn, really? I did not know that.
And you get refunded your escrow, what's sitting in your escrow account, because you're setting up a whole new escrow when you refinance. So
I did not know that.
I always tell people you're getting a payment vacation and you're getting some, money in your pocket, plus saving monthly and all the other things that come with refinancing. So a lot of benefits to refinancing.
For the real estate agents, do you see a lot of young guys? I mean, because also, how'd you kind of meet Easton too?
So to answer your first question, yes and no. I think there's a lot more younger people like our age getting into the industry. When I kind of got licensed and hit the ground running, that's who I targeted. I targeted millennial realtors, just people that I knew wouldn't have a problem sitting down with me, having a meeting, talking business, kind of seeing where their goals are for their business and seeing where I could help. That was my whole strategy. So yes, I am seeing a lot, especially in the Toledo area. And then how did I meet Easton? I was making a list of all the realtors when I was getting licensed and going through all my training with my company, and I was making a list as I was completing my 6-week course. And at the end of it, they were like, look, at the end, you just got to call these realtors and make some meetings and talk to people. And Easton was probably one of the first people that I put on my list. And I just called him one day and I was like, hey, you want to sit down, have coffee? We met. And that was it.
There you go.
He's one of my business partners. So yeah.
There you go, man. Is there anything you want to talk about on the podcast, or?
No, not really. I think if anything, just informing people about the home buying process. It's really easy. It's getting pre-approved. It's letting somebody like myself look at what you got going on, look at everything top to bottom, let you know what you can afford and what you can't afford. There's so many rules and regulations now that we all have to follow that, like in 08 and 09 almost can't even happen now. I mean, there's a lot of gray area that people still play in, but there's so many things that we have to follow and look at to where, I can't put you in a bad situation. So you can tell me, hey, I only want to afford $800 a month. Well, I'll show you what that comes with, what kind of home that is. Maybe, you look at your budget and say, I can afford $1,000 a month. Okay, well then that's this type of mortgage. So I think informing people as much as possible on kind of how the process works is just what I'm after every day. Um, and just kind of being that transparent advocate and trusted advisor.
That's awesome, man. That's awesome.
Yeah.
What where do you see yourself kind of doing this in, the next 5 years or so?
Um, I've pretty big goals for myself just as a person.
Good
I
man.
guess I'm a very competitive person. I'm a very just goal driven type of guy. So 5 years, I hope I have an awesome business built with doing this stuff. I hope I've built a lot of relationships with people around the city, and people know that I'm kind of the mortgage guy. And if you have mortgage questions or concerns, that I'm just a guy that'll give it to you straight and not steer you wrong. And I don't know, just trying to build a good business for myself to, to ride off into the sunset with. And,
Hell yeah. Um,
yeah.
yeah, I'm gonna try to buy a property in Toledo sometime. I'm gonna have to hit you up about a possible agent because the one I had in Columbus, man, was just he was awful. He was a young guy, but he was not interested. But I kind of knew what I was looking for, and he was kind of showing us around. But I was not happy with him, and probably should have changed it up. But
we're based out of Newark, so I got a bunch of loan officer buddies that are down there that are awesome. That are guys that kind of know this stuff way better than me. So I could hook you up down there if you're gonna buy something up here. I'll help you out.
Yeah, I was looking with a buddy in Toledo too, and we had some she was like 89 years old or something showing us around. She was super fit. She was probably 80, but she was okay, that's way too old. Probably like 70, 65 or whatever. And she was so funny, man. It was like she had no idea about what we wanted. Is just she was pretty cool though, but she had my back, but I ended up not going with her, but because I was looking towards Columbus more. But man, that was just I forget her name. She's funny.
Did you grow up so you went to school in the Toledo area? And then you moved down to the Columbus area?
I was born in Perrysburg, and then I went to school in Athens, Ohio, Ohio University.
Okay.
And then I moved to Columbus.
Okay.
Mm-hmm.
Yeah, I got some friends and buddies that went to OU. I was down there during the 2009-10 time, so I've spent many a day on that campus.
Yeah, it's a good time. That's for sure.
Yeah, it's a good place.
Anything else you want to leave out to anybody? Because we're basically hit the 30-minute mark, and it takes forever to upload these things.
No, I appreciate you reaching out and having me on. I don't know. I'm licensed in Ohio and Michigan, and just trying to build a business. So if anybody out there has any mortgage needs or wants or has any questions or just wants to bounce something off me, reach out. I'll be more than happy to answer anything. I'm on Facebook, all the social media, Peach Schlegels everywhere, Peach Schlegel Mortgage on Facebook, and then you can call or text me 419-913-8234. That's me.